You gonna watch my Buffalo Bills kick off the NFL season on Thursday night?
Absolutely not.
You know the it team that everybody in the league wants to watch.
Well, on ESPN, they keep saying how Miami's going to dominate the AFC East, so I guess we'll see. All right, everybody, welcome back to the show. I am JC Peretz, and I am joined, as always, by my esteemed colleague, Mr. Sean McLaughlin. Give it up for him, y'all.
What is happening? What is happening?
Oh, in environments like this, I just want to sell the wings. Selling wings naked is what I've been doing all day. Probably been doing it for about a week now. Selling the wings naked.
Is that what we're calling it now? Just sell the wings?
Selling the wings. Isn't that not what we're doing?
It's what we're doing, but it's an unusual way to describe it. But sure, we'll go with it.
Sell the wings. I mean, listen. There's a lot of, we're looking at regional banks here, financials in general, messy market, great. There's a lot of really charts that look like this. You had a big bounce off the lows, retraced about half. Industrials kind of look like this. Some of the like technology, for example, looks like this. Utilities probably don't look like this. Energy doesn't look like this. And then communications on the opposite end, retesting those summer lows already or close to it, doesn't look like this. But everything else in the middle kind of looks like this. So while we are choosing to express this through financials, regionals in particular, we talked through it, talked about the volatility setup. We got a lot of room to the upside, a lot of room to the downside, selling both. I like it. Just collect that income, right?
Well, look, this kind of makes sense when you think about what has transpired over the recent several months, right? We just had a pretty big sell-off from basically Jan 1 into the early part of the summer, right? So that takes a lot of energy. A lot of people, a lot of work went into that, into stemming that slide. Then we've got the Jackson Hole thing that just got out of the way. We just got earnings season out of the way. So it totally makes sense to me that maybe the markets are going to consolidate here for a little while. It would be very healthy.
And if you're a short-term trader or something like that, swing trader, there's a lot of traders getting chopped up in this sort of market. It's important to recognize that. And there are ways to take advantage of that. Traders getting chopped up, essentially making donations into the market. It's up to us to either collect those donations or not. Right? The old the guy with the bow tie. When there's money sitting on the ground over on the sidewalk, go walk over and pick it up. What's his name?
Oh, old Jimmy Rogers.
Old Jimmy Rogers. That's exactly right. So, that's how I look at this, right? When we don't have to put on a trade every day. We don't have to put on a trade every week if we don't want to. Let the market come to us, and let the market behavior dictate what we do. And what is the type of thing that tends to do well in an environment where volatility is spiking and prices are messy? Sell the wings.
That's right. And, it makes sense, too, for our portfolio, at least my portfolio. I have a lot of directional bets on right now. And when I have a lot of directional bets on, I like to balance my portfolio a little bit by having some delta neutral exposure that will make me some money if the market just does absolutely nothing and goes sideways. And for this KRE trade in particular, you and I talked about this offline, but generally speaking, when I'm selling a strangle, I want to do it in an instrument that is at the upper end of its volatility range for the past, let's say, 6 to 12 months. KRE is not at that point, although the volatility is not cheap. But really what makes this trade a high probability of success in my mind is the fact that we've identified some levels that we think this stock is, or this index or ETF, whatever you want to call it, we've identified some levels that it's likely to stay within, at least for the next 3 to 4 weeks. And those levels being 57 on the downside, which acted as support during the early summer sell-off, and 69, which proved to be the top just a few weeks ago.
I want the audience to just understand sort of the thought process behind all of this. We were talking about, you mentioned the 68s, 58s, right? And you were like, this looks good. I was like, well, what about taking it out just a little bit further, go 69, 57, widen that out? What's that going to do? It's going to increase our probabilities of success, but we're going to generate less income. Do I have that right?
You are correct. And, we never did talk about this, but the reason why I had selected 58 and 68 at the beginning was I just kind of did a dumb, I just looked at the 25 delta options, and that's where the 25 delta options lined up. And that's often where I will first look when I'm looking to sell premium. Then when you suggested the 57.69, it definitely made more sense to me just from a technical aspect. When you look at this chart, I mean, those levels line up perfectly. So made more sense. And there was still plenty of premium to make it worth the effort.
Yeah. So I really like that, being able to open that up, collect a little bit less income, but now we have less risk, right? I think a lot less risk. I think the ability to collect just a little bit less income, but have substantially less risk, I'm okay with that all day, right?
Well, more than that, it's just we've increased our probability of success, right? And that's really all you want. In trades like this, we put these trades on because they have a high probability of success, and the higher we can increase that probability, the better.
All right, so let's walk through this trade. You want to talk about sort of the strategy, what exactly we're putting on, where we're taking money off the table, where we're wrong. Let's talk about that.
Sure. So we're selling we're doing the regular October monthly expiration options, and we are selling the 57 puts and the 69 calls. We collected $1.45 for the trade. I think it's working right now for us. I think we're up a little bit. So if you were to sell it now, you might get a little bit less, but I still like the trade. I still like the strikes. Don't pay any attention to the numbers there at the bottom, those -7s. That's the contract size that I traded. I get these questions a lot from people like, oh, should I be selling 7 also? And the answer is absolutely not. You have a different size account than me. You might have a bigger size account. You might have a smaller sized account. You might have different comfort levels with risk. So I can't tell you what size the trade, but you got to put some effort into figuring out the size that makes the most sense, the most prudent sense for your portfolio. So I just wanted to mention that because I get a lot of questions about it. But the important thing is that we're selling an equal amount. So however many contracts we're going to enter an equal amount on both sides. Now, as far as risk management goes, we're keeping it real simple here, JC. If KRE trades outside of our short strikes, what does that mean? Anything below 57, if KRE closes below 57, or if it closes above 69, that's our signal to get out. Does that mean that the trade's not going to work eventually if we held on? It might still work. It still might be profitable. But JC, the whole reason we're in this trade is because we have a thesis that KRE is going to stay within that range. And if it's outside the range, then we're wrong. And I don't want to fight it. That's how losers trade. We fight the market when we're wrong.
Now let's talk about taking profits. Let's say in the off chance that we get this right, what happens?
So we collected $1.45 when we put the trade on. My best practice, and there's different schools of thought on this, and whatever works for you, keep doing it if it's working. But for me, when I sell a short strangle, I like to buy it back, close it for a profit when I can do so after I've collected approximately half of the maximum potential gain in this trade. So the maximum potential gain in this trade is that $1.45 credit that we collected up front. If KRE sits right here and does absolutely nothing from now until October expiration and our options expire worthless, we will keep that $1.45 credit. That's the most we can make. However, I don't like to sit around and hold this thing all the way until expiration. The longer you give the market a chance to do something crazy, the more likely it is for that to happen. So when I can take the trade off, when I've earned half of the maximum potential profit in the trade, that's when I do so. Take the risk off, then look for a new trade with a better opportunity. But we don't like to be greedy in these types of trades because when you're greedy, eventually you get bitten and it hurts.
Yeah, not worth it. The best practices, it gives you a plan. It's easier to sleep at night knowing you have that plan. When you stick to that plan, win, lose, or draw. Sometimes you're going to stick to the plan and it's going to be like, oh, if I wouldn't have done that. At the end of the day, it all comes back. That's how I see it. And then having a portion of your portfolio that is collecting income and, diversifying away from, directional bets that, a lot of investors, myself included, I'm leaning towards directional bets always. So having these delta neutral strategies is really, really helpful. All right. So we are selling the KRE. This is the regional bank ETF. We're selling the KRE October 57.69 short strangle for approximately $1.45 is what we got. That means we're naked short both the 57 puts and an equal amount of the 69 calls. Naked short, 69 calls, 57 puts in October. I like the trade, Shawnee.
All right, buddy. Hey, I'm sure you're aware, but in case you're not, this weekend, college football season starts for real.
Oh, yeah. Who's Florida opening up against?
Utah. Ooh, tough game.
All right. Miami's got Bethune-Cookman. Nice little warm-up game. Nice little warm-up game. Get the season started.
Yeah, well, that's what Miami does. Little warm-up games. Florida just goes right for it, man.
Oh, Florida plays those junior varsity schools too. We all do it. It's something good to do. All the big schools do it. Gives recognition to some of the smaller schools. It's an important thing. The Gators just happen to do it more than the Hurricanes,
Right, sure.
All right. We'll see as the season progresses. By the time this options contract expires, we will have some further insight into how the Miami Hurricanes are just absolutely dominating the state of Florida.
My bet is that by October 21st, that's the day of October expiration, the Florida Gators will be ranked higher than the Miami Hurricanes. That's my bet.
I'll take the other side of that.
All right.
Easily. All right, guys. Thanks.